On today's episode of the Virginia Investor Podcast, we have an awesome real estate investor who I have a lot of respect for. A few years ago, his name started popping up, and I started seeing it more and more. I started seeing it in articles, and I started seeing really cool buildings that this investor was operating on. And it circulated throughout the Peak team, and we were like, man, we got to get to know this guy. He seems like he's doing some really cool projects. And then the more we looked into what he was doing, we were more fascinated because it just seemed like there's a really cool story behind it. And he was a younger guy, kind of like just racking up these buildings and doing some really cool projects that seemed to us as very intentional. So like it wasn't just buying any property he could get his hand. It was just very intentional, methodic growth of a portfolio, and then really cool projects that he had under his belt. We had some mutual contacts. I'd met him a couple times over the years, and then fortunately throughout the years we've gotten to know each other a little bit and have done some business together. So I wanted to get him on the podcast, and I am proud and happy that Alex Griffith is joining us today. Welcome to the podcast.
Yeah, thank you very much.
It's good to have you. So we actually had your brother was in here shortly before, maybe like a couple weeks ago. We didn't record with him, but we might record with him at some point. It was cool having him in here. It's really cool seeing what you guys are doing in this community and kind of how you're reshaping the landscape of some of these buildings. I would really like to get an idea of where it started, how all this came to fruition for you. I like understanding the mindset of successful investors and what challenges they faced and what they had to get to where they are now. If you would, tell us a little bit about your childhood. You grew up in Richmond. What was that like for you?
I grew up in Richmond. I'm the oldest of 5 kids. My dad was a pastor in Richmond. We lived like far West End, like Short Pump, before that area was really built up. And it was, fine, kind of normal childhood. It was, my dad being a pastor meant that if you wanted to go to college and stuff like that, you had to figure out a way to get there. So I worked a lot as a kid, kind of, as soon as you were allowed to start working, I started doing that. And I would pretty much do whatever paid the most, which was often construction-related stuff. So I did a lot of, small contractor type of stuff in college and in high school. And so I had a fair amount of, like, not any skilled experience, but just a lot of labor.
Right. So you had a lot of time on site, like on job sites and stuff like that, and seeing what skilled guys were doing and things. How did you? Because there's a lot of ways to make money even as a kid. Like the obvious one's like cutting grass, right? Like a lot of people cut grass to make some dollars, buy a bicycle. Why did you choose construction? Because that is kind of hard work, like the laboring side of that. Why did you choose that?
I mean, it wasn't the only thing I chose. Every summer it was kind of like, how can I max out what I can make this summer? And so sometimes construction's often earlier hours, so I could layer it. So I'd go to work a construction job that started at 6, be off in the early afternoon, and then I'd go like lifeguard at a pool.
Awesome.
For that, which pays nothing, but it pays something. But I could kind of add that on, or go work as a cashier, in the afternoon, something like that. So,
was your intention specifically to save up for college, or did you have other goals with this money?
Yeah, no, I was just saving up for college. Yeah, if you wanted to go to college, you had to save up. So, buying a car, saving up for college, that kind of stuff.
Do you have a specific college that you wanted to go to from your childhood, or?
No, I ended up at UVA, which is a great fit.
Awesome.
It was really wonderful fit for me. But I was kind of looking all over the place.
Was it good for you to go to college and get away from the 4 other siblings and sort of go off on your own?
They're awesome, but it was good. It was good to go out on my own a little bit.
Yeah. What was your plan for college? Like, what did you want to study? What were you interested in at that time?
Yeah, I was a math science guy going into college, so I thought I didn't really know what I was going to do with it. But the first semester, I was like, okay, I'm going to do math and biology. So I got to college, started taking these like advanced level classes that I really wasn't prepared for. Totally was burnt out and was like, I don't like this, and pivoted all the way to English literature. So I graduated with an English lit degree and no idea what I wanted to do. So I ended up right out of college. I was working a sales job, and it was fine, but I knew it wasn't what I wanted to do. And I was like, man, I'd love to get back into doing construction in some form, because I like being outside. I like being on the site. I liked those craftspeople and being around those kind of people. And so I was talking to a friend. I was living up in Arlington. I was talking to a friend of the family who was an architect, and I was just asking, like, how do you get into, should I go back to school and get a civil engineering degree? You know, I've tried interviewing with a couple places, but I don't have any resume that someone would actually want to hire. And he said, I'll set you up with a couple places to talk to. And so I talked to a couple of different guys, and one was a commercial contractor in Northern Virginia, and ended up working there for a number of years. So, you know, assistant project manager, assistant superintendent, ended up being a project manager there, and getting a lot of reps. They were doing a lot of, like, a real variety of construction, kind of like commercial construction types, a lot of site work, a lot of masonry and steel buildings, stuff like that.
A lot of ground up or any redevelopment?
Yeah, I mean, yeah, all sorts of stuff. But no housing. It was all commercial stuff. So,
right.
You know, rehabbing a school. Like, we had this phased school renovation that we did. That was the first project I was on site for. Building out rec centers, stuff like that.
Cool.
So just a variety of work, which was really cool.
And you got to be involved to some extent from the start to finish of these projects and see them through?
It was a great company to learn at. I mean, I got time doing estimating, I got time on the site, I got time in the project management chair. So I just got this, like, real nice broad, and they had awesome superintendents. So I got, like, a ton of, like, just basic construction education.
That's awesome.
Yeah.
That's cool. And it was something like, did you find at that point, because you were kind of burnt out in college to some degree to switch your what you were studying, did you feel that burnout at that construction company at all, or was it like fueling a passion for you?
I loved it. I mean, I like work. I like hard work, and I like learning new things. Mm-hmm. That's really, I love learning, and construction is a great place to. There's just, like, every project's different. Mm-hmm. There's always problems to solve. I didn't feel burnout. It was a very intense, fast-moving place to work. Right. But I was single, had plenty of time. So
I'd say for a lot of people, like, intense, fast-moving is what they're looking for.
Yeah.
Like that's a good, and if you enjoy it, if you're passionate about it, intense and fast-moving.
But I at the time I was like, I don't know if this is what I want to do forever. Maybe I want to go back and get an MBA and do something else, or I didn't know. I was just still figuring it out. I liked it, a lot, and I could see. I think at the time I thought, like, maybe I'll go after this and, like, start a subcontracting company in commercial construction or something like that, so I can have a little more control and not have to work with some of the clients we had to work with.
Right. So what'd you do after that?
I got married and was still living up there working for that company, but my wife's family, her dad and I were really close. And her dad did residential custom home building, really high-end. He mostly did, like, really cool subdivisions, like pocket subdivisions, and they lived out in California. So I got married, got really close to my father-in-law, and they pitched on. I was ready to make a change, and I was ready to move away from DC. And so, he was like, come out here and work with us. So he had two sons, my two brother-in-laws, who were working with him, but they didn't have a construction background. They were development guys. So he was doing development, ground-up stuff, all single family for the most part. But they kind of needed a construction guy. And I was like, maybe naive enough to think, like, working with family, if it doesn't work out, it's no big deal. So, which it worked out great. But, there were plenty of people who were like, dude, this sounds like a really bad idea. I'm like, how bad could it be, Yeah. So I moved out there, started working with him. He passed away about a year after, and I ended up buying into that business, and so I ran that with my two brother-in-laws, and it was great. I mean, totally different skill sets. We grew that company. We totally pivoted. We still did single-family custom home stuff. We had a part of the company that did that, but we pivoted into doing townhouse projects and condos and apartments and some commercial stuff, and just kind of a variety of where we saw opportunity in the market out there. And it was great. We built it. I think it was like maybe 8 people when I moved out there, and it was 50 going into COVID. So
and that's not easy to scale something like that either.
It was a good run. I mean, we were coming out of the financial crisis. A lot of the competitors had been blown up, so we had a good tailwind.
How did you find success working with family? Like, what do you think made that successful versus other families when they aren't successful?
I would say this is not just with family, but kind of broadly with partnerships. I'm a big believer that a good partnership is where you have shared values, but different skill sets. That's usually the best partnership. So you got to really know like those values are actually shared in terms of like, how are we going to treat people if there's a downturn? Are we on board with like, we're going to lay a bunch of people off, or are we going to, those kind of things of like, how are we going to handle situations and conflict? I think you got to have that. And if it's family or not, it doesn't really make a difference. So the family thing was fine. It wasn't a real big, like a negative. The three of us had very different backgrounds and interests and kind of brought different things to the table. And then since, moving away from that company, I've continued to work with family and different family members in other capacities. So I think it's all about kind of setting the right ground rules and kind of respecting each other's different abilities.
Right. What brought you back to Richmond?
Well, a lot of people did the life evaluation thing during COVID. So COVID hit.
Okay.
That was a big stressor out there. My dad had passed away. My wife's parents had passed away. So we were down to one grandparent, and she was on the East Coast. And so we just felt like this is, for our family's sake, it'd be good to be near my side of the family and my mom.
What was unwinding like in California? Was that a big process, or did they just continue their thing and you just kind of backed out of it?
No, it was long. I commuted out there for a long time because we had never thought about that before. It was like, they were very supportive I said, like, this is what's on my heart. I think this is the right direction to go for our family. Mm-hmm. And they were on board, but it was also like, we haven't thought this through. So I traveled back and forth a lot as I was kind of getting my feet set out here as well and kind of wrapping things up and trying to do a clean handoff out there. And we have a bunch of properties together out there still. So.
Awesome. What are some things that you would have done in advance knowing, like, in case of needing to unwind a company?
I think it's naive to not have a plan. I think it's much better to have pre-discussed, if there were ever anybody who wanted to be, a different part of this or something like that.
Right.
How are we going to handle that? That would have been awesome because we had no idea, and then it was kind of a very stressful, it's not for a bad reason, but it's just stressful. COVID's still going on. One of these guys is saying he wants to move, and, how do we figure this out? So
yeah, COVID is stressful enough.
COVID was stressful enough. So I don't know. I'm not sure what advice. I think it's a lot of expectation setting ahead of time and really thinking through kind of more downside protection in terms of like what happens. I am a big believer in partnering. I partner on a lot of the real stuff that I do. I partner on investing in small businesses. I'm almost always in partnering, but I also want to set up partnerships where there's freedom for people to pivot because things change, life changes, and so you want there to be some built in as you're doing it from the start of like, okay, here's what we're both agreeing to. This isn't a marriage.
Right.
And if this is going sideways for you or something changes, let's make sure we are proactively thinking about that. So, just from going through that experience, which was not a bad experience, but definitely gave me a lot of like, okay, if I ever go through this again, I'd rather be a little more set up.
I was fortunate from the beginning to have a really strong attorney that I could barely afford at the time where he was like, hey, you need an operating agreement. I was like, oh, what's that? And then so the operating agreement, me and my partners would come up with some terms of some deal or some agreement, but it missed, you give it to the attorney and he would add 50% or, add, double it in size basically. So, but he would add all the in case of like, in case one partner leaves, in case one partner gets voted off the island or, like all these different things for all of us to agree on before any of that happens.
Yeah.
And then it seems
That's
like
healthy.
once you line all that up in advance before there's a conflict, it's just way easier. Unfortunately, there was never a conflict we had to deal with.
Yeah.
But we had an understanding of what would happen in what I would consider almost every situation, even like death and everything else. Like,
well, things happen people don't expect. It's. I think a lot of times those operating agreements are written as if one person's just a bad actor, which can happen. But a lot of times, like, just stuff happens.
Right.
I mean, I remember my father-in-law had to carry a partnership where he was a minority partner, but the majority partner, like, the financial crisis crushed him, and so it was like, well, you're going to lose this whole thing, or, he wasn't trying to do anything wrong, but it was like, so fortunately that was well set up. So there was a scenario of like, okay, what happens if somebody else has to bail this guy out? You know?
Early on at Peak, we decided that we saw all these leases floating around Richmond because I would study everything. I would study everyone's agreements and leases and everything and see what Peak needed. But almost every lease that I saw was, if you want to break your lease, talking about the residential tenant side of things, if you want to break your lease, you have to pay this amount of money, but it still doesn't guarantee that you break your lease. And by the way, you can never actually break your lease. You just have to pay this amount of money as a fee in case, whatever this, it was insane, where it basically said, even after you pay this, you can't break your lease until all these other things. And so early on, we had, we run into that situation where people are like, hey, I have a terminal illness, or I have, I just got relocated across the country. I'm super successful. Didn't know this is going to happen, or divorce, or this, or that. And it's one of those things where it's like, our team could fight that tooth and nail every single day with our residents, or we could come up with a really smart break lease clause that is fair to the resident, that allows it and lays it all out in the lease ahead of the tenant needing to break their lease. And it allows, so all of our leases allow a tenant to break a lease. But there are certain stipulations where it costs $0 for the landlord, but they can break that lease whenever they want. And it's set up exactly to protect the landlord and to ensure that we have a happy resident in place. And it's that sort of thing where it's like, we don't know what's going to happen. We expect this resident to stay in, but if they need to get out, we would rather not force that resident to stay in, as long as that landlord and that agreement is like honored the way it should be honored.
That sounds super thoughtful. I think you got to think of that, like sometimes the language attorneys have in there, the hammers are awesome theoretically, but you're also like, I would never use that hammer.
Right.
That's too hard.
Right.
So how could you structure it so that it's something you would actually use, or you would think is fair?
Right.
So you have it set ahead of time instead of being like, well, the agreement says this, but now I don't want to do that.
Right.
But now I don't have any functional way of operating. So yeah, that sounds really wise.
We've definitely baked those in over the years on like on the things like, how can we have the least amount of friction with our residents, but also not affect our landlords, because we need to act in their best interest and protect the asset and everything like that as well. So you're heading back to Richmond at this point.
Yeah.
Did you jump right back into real estate, like full speed ahead, or were you kind of like, all right, this is a life change, let's reconsider your path, or anything like that?
I jumped right back into it, but it was a different, out in California, I ran all of our operations. So I had a bunch of people reporting to me. So I know I was going to jump back into real estate, but I kind of wanted to break for that period of time of like, that'd be nice not to have a bunch of direct reports. So, but I had the advantage of, like, I've done a lot of different product types. I don't feel the need to fixate on one thing and only do that. And I've got some, thoughts and theories about kind of like how you pick the best fish in the pond to go after. So coming back to Richmond was like, it was cool because it was a blank slate. I don't have any overhead to support. I'm still, unwrapping this thing in California. I can kind of assess what's going on here and try to figure out where I think the right opportunities are going to be, and then what's the best way to attack them.
What was your network like, your professional network like in Richmond?
Oh, my brother's a commercial broker. He does stuff that's larger size projects than I usually work on. But he's a very well-known and well-networked commercial broker in Richmond. So I leveraged his network a lot. Richmond's super interesting. Like, in California, I did not know any other developer. I'd been there for a long time, and I knew one other developer.
Interesting.
At all. And Richmond's like, there's coffees where people get together and like...
Right.
There's like multiple guys who I can reach out to and be like, hey, I'd love to see this project. They're like, oh, yeah, let's tour it. I'd love to see your project. Right. It's a super cool, it doesn't feel competitive against each other. It feels much more synergistic, which is really unique. And that's probably a function of, I was in right outside of Oakland, really, huge metro area. This is a smaller community here, but it's cool. So it wasn't I didn't have a network, but it wasn't very hard to kind of break in here. People were pretty friendly and easy to get to know.
I was curious about that because, you go to California and you come back, it like you need in my opinion, you need a network to be successful, some form of a network, right? Yeah. And so It's interesting to hear you say that about Richmond, because since I've gotten in real estate, my focus has been heavy in Central Virginia, right? Which we'll just say Richmond, right? So I have always noticed that even residential, commercial side, people want to share. And they want to help each other out. And it's more of like the abundance mindset versus the competitive mindset, where it's like, oh, you're trying to invest in the same single family or commercial assets I am in Richmond. Cool. Let me show you what I'm doing.
Yeah.
Like that's awesome. Like maybe someday we'll work together. We can do some deals together or something like that. And I've introduced developers to each other and then walked like job sites with them as they're getting to know each other. So like I've been in the middle of that as well.
Yeah.
And it's interesting to hear you say, like, I've always assumed that Central Virginia was special in that regard. But I've never like tested it. I've never went to other markets and seen how they operate.
I only have a couple markets, but it's definitely different than what I was used to. And real estate is like I'm always confused when people are able to invest from like multiple states away in a neighborhood. You know, to me, it's like nothing is more local than understanding the neighborhoods you're investing in.
Right.
But it's really hard to learn. So like coming back to Richmond, it was like, I got to relearn Richmond because I haven't lived here in 25 years. You know, there's areas that were not even on the map that are now like the hot thing, and I got to understand that. And so you can't learn that from just Googling. You got to be on the street, you got to walk around, and you got to meet people and understand, like, what are you doing? How have you seen it change? Oh, you've been a part of, you know, this revitalization of Manchester, Scott's Addition. Like, what do you see the tailwinds as here? You know, stuff like that. So, yeah, it would be a lot. I don't know if it'd be harder somewhere else, but that definitely helped here.
We have investors that will look to buy $20, $30 million assets, and they've never invested in Richmond before. I will take them out to dinner, and they'll be like, we feel like you have a good team. We're willing to invest in this market. Yeah. And I'm like, over dinner.
Yeah.
Like, to me, like obviously they've done a lot more research to get
like
here, right?
You shouldn't think that. Yeah.
Right? But like, it makes me happy to hear that. But and again, obviously they've done a ton of research leading up to that dinner. It wasn't just like they just landed and were like, well, I guess, you know. But I think largely for those investors, it's the team they can find on the ground. And we've had some investors say, if we wouldn't have met you, we would have moved on to a different market. But I still I don't know if I could personally do that because I've seen other deals in other states and I really prefer to stay where I'm familiar with, even though I know plenty of people go outside the state.
I'll stretch a little bit, but I got to follow the same process of trying to learn the area, trying to meet people and feel a level of confidence. I mean, especially with property managers, like you need someone who you're like, okay, I understand how they're set up. I understand what they see in the market. I understand their business model and what makes them successful and how does that align with me.
Right.
Like if you don't understand that stuff with broker, attorney, property manager, you know, you don't know what you're walking into.
Especially with property management, there is, obviously I'm biased on that subject, but like especially that because it's not transactional. It's an every day or every week or every month relationship where things are going on. And we have to make a ton of decisions that we couldn't possibly think the same as the hundreds of clients that we have for every decision that they want made on their property. And so it's our responsibility to make the best decision in the decision in the best interest of the landlord of that property based on their strategy and goals. And so, but it's not always going to be the same exact route that they would take to reach that same result. And so there has to be some level of trust or some level of like, do these people know what they're doing and do they understand my goals and strategies and kind of what I want done with this building? Because you're basically hiring us to make decisions on your behalf of this big asset that you've just bought, you know?
Totally.
So yeah, it's definitely, I think reputation also goes a long way too. Like if you, it's easy to, again, sit down and wow someone over dinner in my opinion, but when you start talking to their other clients and the community about that team's reputation, that could be different than what that dinner felt like as well. Or it could be the same. It could be better. I don't know. But I think being in that local community really, you hear the truth about how things work. And people can't, especially in a market this size, you can't hide for long if you don't have a good reputation.
Yeah, I agree. I think people hinge pretty quickly on what, like, you can't bounce around. Especially on the transaction level, I think that's true. Like, if you're trying to do a transaction that's off market or that's really competitive, being able to say like, okay, here's what I've done already is really valuable, because here it's believable.
Right.
Where in other places, like, I've never heard of this guy, I've never heard of the company.
Right.
Often that's the case.
Right.
If you're dealing with somebody who's owned a building and isn't focused on it, doesn't know the landscape, that's totally fine.
Mm-hmm.
But you want them to be able to figure out like, oh, I've never heard of this guy. What is there to learn? And in this community, you can learn that pretty quickly. Oh, they have a good reputation.
Right.
They're known as a closer. They're not a renegotiator. Or, man, this guy, he's nickels and dimes.
Right.
You get
Hard
that
to work
really
with.
fast.
Yep.
In a big metro, I don't think you get that as easily. So it's just different. But it's great. I like that.
I think that's an advantage we have in this market because
Yeah.
I enjoy and appreciate the relationships and learning from other people.
Totally.
But so when you're working for a construction company after college, you went to California, did your thing. Sounds like you did some awesome stuff there. Were you really heavily involved on the investing, the business side of it, the number side of it, or was it more so the construction? Where did you get the number side of it?
Yeah, it was both of it. I mean, I was running the construction side, but got more and more into the business end of it, both as running the business as a whole and also kind of the deal by deal numbers and everything. We would kind of, as investment committee, that stuff as we made decisions and invest in our own projects and stuff.
Compared to California, like you came to Richmond, had to start finding deals in Richmond, and it sounds like you quickly built a network and probably found deals that way. But how was it finding deals in California versus finding deals in Richmond?
In California, the competitive advantage that we had was that we were completely vertically integrated, so we could do ground up ourselves. That was one thing. And then the second is it was a fragmented jurisdictional market. So the tons of really small kind of like villages, and everyone had its own personality. This one's pro-development for this type of development. This one's anti-everything. This one, the city manager is really involved. That one, the city manager changes every 2 years. We'd been there for years and years and years, so you really understood the market and you understood the opportunity set. But the opportunity set there was best for ground up construction, whether that was a little commercial project or that was a subdivision or whatever. So that's really what we did. We ended up doing some other stuff, but most of what we did was ground up of some kind in these little jurisdictions where we felt like we had an edge in terms of kind of knowledge of the process, or like what are they actually interested in, that kind of thing. In Richmond, I came in thinking, okay, I know how to do ground up stuff. That's probably what I'll end up doing here because it's in some ways the hardest thing to do. And so it's just, fewer people doing it. But like I said, I was coming in with this sense of I've done a lot of stuff. I've got some theories about kind of like what types of things I look for. And let me just see what lands, and it was during COVID, so it's probably not going to be a lot of office, but I did end up buying one office property during COVID, but that was the mindset. And so what I pivoted to was actually where I saw the opportunity at the time, which was mostly small apartment buildings that were legacy owned or out of town owned and not really run professionally.
Mm-hmm.
A lot of them were off market. The seller would be like, I've had this, I haven't had a vacancy in 8 years and I haven't raised rent and also repaired anything, Right. So they had these things that were, and when I would underwrite them, I'd be like, man, I can get ground up returns right now in this pocket of, for doing things that are much safer. I can get ground up returns, but the kind of like range of returns is a lot tighter.
Right.
Like my downside is way more protected because it's already an existing asset and I can buy it for what this seller thinks is like a great deal. It is a great deal, but I know, okay, I can, as tenants come up for lease, I can strip out the kitchens, I can redo this, I can manage it more professionally, I can get in the right types of tenants. So that was the first thing I dove into, was picking up these little pocket, 12 to the biggest one was 40 unit apartment projects. And for me, what I like to do is kind of try to layer on catalysts for something to work. So what I like is where you don't have just one thing has to go right, even if you're pretty confident, but it's like if this goes right or this goes right. It's even better if they both go right. So I was targeting properties where I saw opportunity to add value to the property, but I also wanted them in neighborhoods where I thought there was a tailwind. Like, okay, there's continued growth here. I see some cool things going on. I think this property, even if I didn't do anything, would continue to appreciate, but I'm not betting on that. As opposed to like, oh, I can add value, but this is an area that I don't see anything going on. You know, so that took a lot of time to kind of drive around markets and learn, like, why are people excited about this? Or why is no one interested in this area? This feels like, you know, one of the first deals I did was in Forest Hill, which is an awesome, like, a really great neighborhood, like, awesome park, incredible location, and totally at the time devalued compared to stuff all around 100%. It. I'm like, I don't understand this at all. I must be missing something. The more I dug into it, I was like, no, I think this area just hasn't had a chance to catch up yet. So anyways, that's what I started doing. Picked up a bunch of projects. It was working great. The market started to change a lot. Specifically, interest rates started to rise, which happens, and that's okay, and you can underwrite it that way. But a lot of the sellers that I had been working with this was their one asset. They owned it all cash. So they don't care if interest rates rise. They don't understand why, like, well, I can't pay as much anymore for this building because the interest rate is, 400 basis points up from when we talked a year ago. So that market dried up. For me, it did. Like, the opportunity set wasn't there. The guys who were out of town were now, like, underwater on some of their stuff, and so they weren't willing to sell at what they thought was a basement price, and the guys who owned it all cash weren't. So I started to pivot. I'd been doing a little bit of, like, heavier rehab stuff, where, like, I had a building that had a vacant retail space that I got rezoned and built out as apartments. And I'd found a local developer who does contracting work as well, I'd worked with on that project, and like, oh, I'm really aligned with this guy. This would be a good fit. So I pivoted from doing that stuff to like, okay, I want to find things that are more hands-on, more heavily development, and have started doing a little bit more of that. So a little more, a little bit of ground up stuff, heavier rehab. He and I bought an old theater that's on the north side that had been, just totally neglected as a building. Really cool building, but just like the roof had been leaking for like a decade, and it's just garbage heap. And so built that out, turned that into a mixed-use property, bought the building next door that was a restaurant, kind of upgraded that, bought the property across the street, and did a retail thing over there. So I've kind of pivoted as I've seen the market adjust. That's the way I like to do it, is like, where do I think there's opportunity in the market, instead of trying to like force my playbook, but like, let's just keep evaluating, like, okay, what's the best opportunity set right now?
One of the most successful people that I know personally, that's I'm close friends with, anytime you talk about what could happen or whatever, he's like, doesn't matter, I can adapt. Like, as long as you're willing to adapt as a business owner or an investor, if you can adapt to whatever is shifting, that's how you win. The people who can't adapt, that they're stuck in their ways, or they only know one thing, or they're only willing to learn one thing, are the people that get caught and get caught up in things. So, because a number of times I've asked him about his background. Hopefully someday I'll get him on the podcast, but have asked him about his background, and I always ask these questions about, how did you end up where you are now? And he's just like, I'm just willing to adapt. Like, I just go where I think things need to go, and I'm willing to learn these new things and put in the effort. And
I think the willing to learn is the biggest part of that. I think it's easy. Well, there's two components. One is like being willing to change your course, but having the respect for, like, I don't know enough about this.
Humility.
So now I've got to learn it before I think this is a good idea, but I'm not going to just dive right in and say like, oh, I've heard single family is great, I'm going to just jump into single family. Like, it's a totally different market. Like, I've done some single family. I've spent a lot of time studying that because it's a totally different setup. The property management's different. The tenants are different. And like, so sometimes you see people who have this hubris of like, oh, I've been successful over here, I can just slap that same playbook. And a lot of the fun of it for me is like learning something new. So like, okay, I'm having a lot of success in this one little area. I think I could expand on that. Let me learn more. Let me talk to people. Let me understand, and finding the right partners. A lot of my brother being a commercial broker was awesome in terms of network. It also was awesome because he could feed me a lot of like deals that were too small they were smaller than the stuff that he normally transacted, but he'd be like, hey, I heard that guy might be interested in selling. I heard that, so like having good partners who are already in a market that you're interested in, being willing to partner, with him and this other developer that I work with and other business things that I've done. And then just that eagerness to let me keep trying to figure out what do I not know,
Yeah. Shout out to Calvin Griffith with CBRE. Awesome team. Great group of guys on that team. Was he already in commercial real estate by the time he got back to Richmond?
Yeah.
Cool.
Yeah.
So he was already doing his thing.
Oh yeah, he was already
cool.
doing.
So he was primed and ready to help you.
Get
in the market as well.
And he was doing bigger. He was doing 200 unit projects, and I had done some bigger stuff, but I didn't want to come back and do. I didn't think the opportunity for me was there anyway, because you gotta raise a lot of money, and
right.
It's just a different structure. So.
And one thing that I always really appreciated about you, just kind of like looking from a distance at like the portfolio building, you have, without like calling out each building that you own, you have some really awesome properties. And I mean, like, again, to your point, like you said, there's one thing to just go buy distressed properties anywhere and fix them up and ensure there's a return and there's a game in that. But like, it seems like you have been very selective about what you've chosen to invest in and where you are. But the kind of the question I have, because again, without calling out the properties, I have these properties in my head and I'm like, they are awesome. I've spent time in almost every property except for like the abandoned properties that you've owned, but out front of those properties, I'm very familiar with those properties. They're in awesome areas, like places that definitely have a tailwind in Richmond. How did you get them?
Yeah.
And no one else? Like, because some of these buildings were sitting here for a long time.
Yeah, a lot of them are off market or were something funky about them. I mean, there's one that's not in Richmond, it's down in Norfolk. There was a guy who, it's awesome. It's in Ghent, really cool building. Guy had already actually done all the work fixing it up. He wanted to sell it. It had a Freddie Mac loan on it, and he didn't want to take it to the market. He wanted someone who would just assume the loan. And this was before rates moved and people started being willing to do that. And he was willing to sell it for a really low value just because he didn't want to deal with paying off the loan, and that's fine. But that's like, okay, well, I'm going to have to do a bunch of work. I've done those assumptions before. They take forever. But you can find value there. So I think it's like part of it is being willing to try to understand for something off market or pre-market, what does the seller actually want? And so this is less like sometimes I'll option things at a price that's higher than I normally would pay because what I want is enough time to try to re-entitle it. That's more for ground up stuff. Right. And what the seller wants is a certain price, even if it takes them 2 years.
Interesting.
That's great. I can find something where it's like, great, this is a price that you want. This property's not worth it. But if I have time to do what I want to do, it'll be worth it to both of us, and we can find something that meets your goal and meets mine. So that's some of it is just trying to have some flexibility. Some of those properties had been on the market before, and maybe they were asking too much or had unrealistic idea of what the market could support. And so same thing, just trying to be like a known buyer and sit down with a seller and understand what they're trying to do. Legacy sellers, a lot of it, they're really like someone whose grandpa built a building and now they own it and manage it and they know the name of every tenant and they've changed all their light bulbs. That's a totally different seller than like some guy in DC who is a dentist and bought this property. They're both totally valid owners of property, but they have different motivations. The first guy really wants to know what you're going to do. The second guy really doesn't care. He may not have even seen the building in person before. And the first guy, like, he wants to tell you, I had one property, the guy was telling me, like, my grandpa used to sit here as people came back from work. He sat on this step right here and would watch people come back from work, and he built this. So understanding somebody's story and what is important to them and trying to honor that and being honest about it's awesome. I'm gonna maintain this property. Honestly, it needs more maintenance than it's had, and I'm not trying to force people out. I'm not gonna just tell everyone they need to be evicted. I'm gonna wait as people come up for turnover and that kind of stuff. So I don't know. I think. Yeah, I don't know if that's a very good answer to what you're asking.
I think it's a great answer because it allows us to see inside your mindset of like how you're dealing with these sellers, because whether you downplay it or not, like the buildings that you have bought, you're not the only one going after those buildings,
Yeah.
right? And you're not the only one that's like sitting down with sellers and trying to understand their goals and learning about why they want to sell. But you're getting the properties. And I'm not saying you're getting 100% of.
Yeah.
You're taking a lot of shots, I'm sure.
Yeah.
But you're getting some awesome properties and some great locations that some of them have been untouched for many years. Meaning they've probably been hunted by investors for many years as well.
Yeah, that's true. I do think the other thing, I don't feel an urgency to do deals.
Which is great. That's a strength for sure.
Yeah, but that's definitely something that's grown over time of like, do the deal if it makes sense.
Mm-hmm.
And if you spend a lot of time pursuing something, don't get into sunk cost on like, I've got to get this. I'm going to stretch. Because in real estate, value is what you pay up front.
Mm-hmm.
That's how you make money. It's what you pay. You can do all sorts of things to improve a property, but if you overpay for it, you limit your upside from day one. So, you got to pay what you think is appropriate. And sometimes that is over market and what, the market, you're seeing it differently. I'm not saying you're always like nickel and diamond. You got to be the cheapest guy,
Yeah.
but you got to know that you're getting something that pencils, and you're not like, anybody can manipulate a pro forma to show like incredible
100%.
returns.
Yeah.
Like there's 100 variables in a pro forma, so you got to be honest with yourself about it, and you got to say, this is what I think it's actually worth, and I'm going to stick to that, and I'm not gonna move off that,
Right.
and I'm gonna really understand. And sometimes that means I'm paying more than somebody else will, but sometimes it means less, but in a time frame that works for a seller or whatever. So just being flexible.
I think one strength that you have is I don't hear any like ego coming out, like where again, same with a lot of the more successful people in my network, to them it doesn't, like, it's not an ego play for them. Like for me, it's not a unit count in property management. Like I don't care if I have 4,000 units or 8,000 or 1,000. Like it's just, I want to have a good company.
Yeah.
And so in the right relationships and the right assets under management. But for you, like I think in your shoes, it would be easy to be like, I need to get this deal because if I own this building, I'm going to be like, people are going to know me or it's going to add X amount of dollars or strength to my portfolio. But it sounds like you have less of an ego in a sense that like you need to buy the deals and you just, hey, if it makes sense, it makes sense. Like I don't care if I own 100 properties or 50 properties. It's just got to make sense.
Yeah. I'm pretty private. I mean, even coming on a podcast,
right,
honestly, is like a little bit of a stretch for me. So, it's not a big motivator for me. Like,
awesome.
I want to do the right thing for my family. Anytime that I've raised money, try to make sure that I'm being wise about that and do a good thing for partners. I want to bet on people when I partner with people that I'm investing with. Those things are way more important to me. And like the way I'm treating tenants and, setting things up, and property managers are partners, attorneys are So yeah, I hear what you're saying. Thanks for saying that. I don't care if, I don't really care. Like I'm not buying a cool building because
to put your name on it.
Yeah, I'm not into that. That's not a motivator for me. Everybody's got an ego for something.
Oh, for sure.
But
yeah.
I like having cool buildings because I'm like, this is super fun. I love the architecture of this. This was built 250 years ago. That stuff's super fun. But
yeah, that's awesome. So we've talked about partners a little bit. We've talked about like investor money and things like that. How are you typically, like, what does your capital stack look like on these deals? And I'm sure they're different deal by deal, but like, what are some of your go-tos as far as like structuring money for the deal? When
I was doing apartment deals for fixed assets, I would raise money. In California, a lot of our deals, ground up stuff, we raised money on. I don't really do much of that anymore. If it's a larger, like an apartment project, or like a rehab or something like that, I'll raise money. But if it's ground up, I generally don't, and mostly because I know the risk profile, the spread of risk for a ground up, and I'm less comfortable bringing an investor into that because I'm less confident that most investors really understand that. And I don't want to be, I've had deals go sideways, and that's really uncomfortable and awkward. And I'd rather not do deals that are ground up deals that are big enough that I have to have that conversation with an investor. But what I do, if I do raise money, I really try to align the incentives. So I am a long-term holder. That's my goal.
Mm-hmm.
It doesn't mean I'm not going to sell stuff, but I want the option of holding it for a long time. So I don't want a deal that is set up where I am maxed out. I make more money by flipping it really fast, because that's not really what I want to do with my money. So I don't want investors who are expecting that. I want investors who understand, like, this is the game plan. I think maybe we'll sell this in 5 years. Maybe we'll refi it. Maybe we'll hold it for 20. And you're going to have to be excited about, like, the kind of longer term investment options, because I think it's a huge advantage in most things. I think it's an advantage, but definitely in real estate, like the ability to not time the market, but not let the market dictate what you're doing.
Right.
So, like, not as much right now, but 5 or 6 years ago, like, tons of people were doing, like, interest only bridge debt on deals, and they had a short window. If that deal didn't turn in 3 years, they were in trouble, because it wasn't refinanceable. I don't like that. I want, like, even if I think, I'm going to sell this in a couple years, I still want the option of, like, well, what if the market turns? What if that's not the right time? Right. What if it's, there's some stuff I've done in Richmond that I think I don't know about maxed out the value, but I've definitely increased the value. If it was a good market right now for those types of properties, I'd probably sell them. But I don't think the market's right now for me to get what I think they're worth, so I can wait. Right. So I like having that flexibility, and I really try to talk to investors. If I'm going to take investor money, I like try to ad nauseum talk about that, get them really exhausted, and then see if they align with that at all. Versus, because there's plenty of places you can invest money, and people can tell you all sorts of stuff. But I don't want somebody being like, "Hey, man, I need that money back in 3 years."
Yeah, that's smart. I have this kind of long-standing tactic when I send someone a job offer to hire them. Part of that job offer is trying to convince them why they shouldn't accept.
Yeah.
And I'm like, this is going to be really hard. We do a lot of change. We do want to be the best. That we are going to keep you uncomfortable.
Yeah.
And like, there are all these reasons why you shouldn't accept this job.
Yeah.
And so if they accept it, I'm like, okay, we probably are on the same page. But I've seen investors do that as well, where they're like, you probably don't don't invest if these are things like, we don't want your money. Like, this is what you're going to experience, or you might not experience. Who knows? But the money with me is like, I'm making decisions, and we'll just like, I'll do the best I can with your money and with the asset, but like, these are the expectations. How do you find those partners that are cool with that? Have you found a good like method of finding that patient capital that just trusts you and allow you to do your thing?
Richmond is a very entrepreneurial market, which is not how. I mean, I was a child here, so maybe I wasn't aware. I don't remember the kind of like entrepreneurial aspect, small business aspect, owner-operator thing being as big a thing in Richmond when I was growing up. Mm-hmm. My memory was that if someone worked for themselves, it meant they kind of like had flamed out working in the real world.
Right.
So moving back here is super fun, because it's a very owner-operator mindset. There's lots of people doing cool things, small businesses, stuff like that. A lot of those people are aligned naturally with that. Mm-hmm. Someone who's bought a plumbing company and is trying to grow that, somebody like you who's trying to grow a business, often there is a natural alignment with that, because it's not just like, I can do equities or I can do this real estate deal. It's, I'm investing in myself, I'm investing in, they already have a mindset of kind of like capital and time allocation for the long term anyway. Mm-hmm. So it's just friends and family, but I've found a lot of friends who have that kind of mindset.
As you continue to develop, what does your team look like today? Like, do you have any employees, or is it mostly you doing the underwriting, you doing the asset management, you doing a lot of this stuff? Have you built a team around you?
Like I said, I'll partner with different elements.
Mm-hmm.
So I'll bring people on who are not an investor, but actually a partner. Like, we're both buying this together. They're going to do this component, I'm going to do that component. Cool. But I've generally structured it that way so that I don't have to have anybody else.
What about the professional team that you work with? Like, I don't need you to call out names unless you want to, but like, what sort of real estate professionals or construction professionals are you working on these jobs? Like, who do you surround yourself with to be successful at what you do?
I mean, it's the same thing in terms of like, I want people who are similarly aligned. Mm-hmm. So, you got to look at people's reputation, what other things they've done. So whether that's, that probably sounds a little silly to say about like a transactional attorney, but I've got a couple attorneys that I work with. Mm-hmm. One does almost all my stuff. He's awesome. He does a great job. He's He's really thorough. He's really mindful. He's not going to stop a deal. He understands what I'm trying to do.
He doesn't get in the way.
He doesn't get in the way.
Right.
He understands what I'm trying to accomplish. He can work quickly if I need him to. So that's a great partner. Same thing on the construction side. Like, I want to see, I have a certain expectation of quality because anybody can talk about quality, but like actually doing things in a way that lasts for a long time it's a smart way to do things, because if you want to own it for a long time, then you want to put the money in up front. You want to be thoughtful about that. Property manager. I mean, like, all that stuff is the same. It's the same kind of mindset. So I try to really dig in and understand, like, what is this person's motivations? How aligned is this? Sometimes there's some differences. That's okay. But then at least I understand where there's differences. Or,
right.
A lot of that is like, how do they make money? Like, it's good to understand that, like, because you don't want to nickel and dime somebody and get their worst possible service.
Right.
And a lot of people don't seem to understand that. Like, if you, not to keep talking about property manager, if you beat a property manager up, you're not going to, like, naturally, they're not going to give you their best guys, you know? And I don't know. It's just a mindset of, like, you want to feel aligned.
Right. You have also jumped into, at some point in time, some other industries or some other companies that you've invested in or have some ownership in. Was that intentional, opportunistic, like it just fell on your plate, or was that sort of like a shiny object, like entrepreneurial type deal?
In California, I'd done some kind of more entrepreneurial stuff. I met this amazing guy who had been doing remodels for a long time and wasn't being treated very well at his company. And so I backed him, and we grew up another kind of line of business of what we were already doing, going back to a lot of the same homes we'd built for years and years. So I liked that, like, growing a little business. We had our main business and we'd grown this other little thing. And when I was here, I had been kind of worn out from managing a lot of people, but I was missing something. And it felt like I liked the real estate stuff. I liked doing transactions, but I was missing something. And so my wife encouraged me. She was like, you should pray about, like, what is it that you feel like you're. And so the big thing for me was like, man, I miss working with craftspeople, and I miss being a part of, like, blue collar guys, like having a really good place for them to work. That was something that was really fulfilling in California and that I wasn't feeling here. So I had just been, like, poking around that a little bit, that thought. And I had invested in, just as a totally limited partner, in some businesses in Richmond, because it's an owner-operator town. So there's, people who are trying to buy something or, want to expand and are looking for a partner. And I have some friends who are pretty active in that space. So I'd done a little bit of that. I knew some of the brokers and stuff. So I was just poking around and talking to one of these brokers, and he had a company that was up near Charlottesville that does Yeager and Ernst, which is a cabinet company, does these amazing, been around for like 50 years, this like really incredible handcrafted, super high quality cabinetry. And the owner's well into his 70s, no succession plan. What do I do? So I bought that business because partly as an opportunity. I love construction. I loved the product. I partnered on that with one of my brothers who runs it day to day, and that's been awesome. That was like, it's a great company. They make an incredible product. It had not been, it had been homegrown, so it was not run necessarily the same way that I would set a business up. So like getting in there, okay, we're going to get on a professional set of books. We're going to get, normal payroll done, and we're going to create an environment where, like, this is going to be successful for these guys who've been here for years and years and years to, like, make a little bit more money and have insurance, all that kind of stuff. So I did that. I loved that. It was also kind of a slow time real estate wise. So I didn't have a project that was going. I was like, okay, this is going to be my project for the next year, is like getting this rolling and backing my brother and kind of doing this. And then that has led to some other opportunities. So then I and a couple partners bought a commercial cabinetry business in Richmond, totally different business. Virginia Millworks, the name of that business. They do plastic laminate cabinetry, solid surface countertops, more institutional, functional stuff. Very similar though. Like, it'd been around for 40 some years, older owner, great reputation, but he he was running the business a certain way that worked for him as a 70-some-year-old guy.
For
like,
sure.
I don't want to grow. Like,
Right.
I want to make sure this doesn't collapse, you know?
Right.
So, like, okay, how can we capitalize this? How can I back? So I brought a friend in and backed him in that business. And same kind of thing. Like, okay, I'll do the setup, kind of the back end type of stuff. And I love construction-related businesses. I do have kind of I don't think this is a unique thesis. A lot of people think, like, oh, you know, baby boomers are retiring and these businesses are available, which is true. Often they're intimidating businesses to people because it's cyclical markets. It requires a lot of knowledge about construction and stuff like that. But I love those businesses. I love the kind of people who work there. I think the secret to almost all of those is reducing employee turnover and treating people well, which in most industries is normal, and in construction is like a totally foreign concept. So to me, it's like, if you can like show people that you care about them and value their work and align so that it's a good place for them to stay and make a career, you become more efficient, your quality goes up, you know, all these, your customer service gets better. Like, it's a super simple idea, but I really love that, like trying to set that environment up and trying to help, you know, back these guys who I believe in and think they can really do a great job. So I'll continue to do that. That's totally opportunistic. I don't think it's shiny object exactly, but it's because I have the same evaluation of it that I do with real estate, where I've got a benchmark of what return I want to see for different things. I want to understand what the range of those potential returns is. I want to think through, like, are there multiple tailwinds, you know, with those things as well? Like, what are the multiple catalysts? So for those businesses, this isn't being run very professionally, even though they've got a great reputation. They need to, you know, it needs to be run more like a business.
Right.
That's one catalyst. It's also, you know, Richmond is a booming market, and Yeager and Ernst is up in Barbersville, which is near Charlottesville, but they can serve Richmond and Charlottesville. Great markets, like, where there's a lot of need, and there's not a lot of people who are good craftspeople and who can provide this stuff. So I'll continue to do that stuff kind of as I see opportunity, partly because I really like it. And I, like I said before, I love to learn stuff. So I know a lot about construction, but man, you get into a trade and you're like, I thought I knew a lot about cabinetry, and it turns out, like, I didn't know very much at all. You know, like, there's like massive amounts of information I didn't know. So just that learning process is super fun for me too.
I think it's awesome. And it should feel very fulfilling, like keeping that skill set local.
Yeah.
Like making sure that skill set isn't dying out. Like, you're providing a good working environment for those people, or keeping them in that trade and not going off to somewhere else where then we're losing that art locally. Like, I don't know. I think a lot about that. People who are able to run businesses and take care of their people and make sure it's a good culture and make sure that it's not just about like, you obviously have to make money to stay in business, but the more money you make, the more you can take care of your team.
Yeah.
Right. And then it's 100%. All just goes like that. So
yeah, it's synergistic. It's not everything's a win-lose. Things can be a win-win.
Yeah,
you know, creating a great environment, capitalizing a business properly, understanding the dynamics so that one down cycle doesn't wipe you out because you're just like on a razor's edge.
Right.
You know, and like a lot of those guys don't run that way, and that's why their businesses are really tough places for people to work.
Right. If someone else wanted to get started in redevelopment, development, but they have done nothing in construction, they don't have any relationships, they are just a human that exists on earth that says, I want to get started in development, redevelopment, real estate in general, what do they do for the next 90 days?
I mean, I think the first thing is to say, where do you try to learn enough to understand where you think the opportunity is, not just what you would want it to be. So, you know, what is the market actually, 90 days is pretty fast, but what is the market actually dictating? What is the market, where are there opportunities in the market? What are the neighborhoods that are changing or improving? You know, what are the needs? You know, Richmond's easy in some ways because, like, booming in terms of there's a lot of need for housing.
Right.
There's a lot of jobs being created here. That's really obvious. If you do something residential related, there's a good chance that there's some neighborhood that needs that. And then I think it's like, once you have that trying to target in and understand what kind of like functionally needs to be done there, I think most people starting small is the right approach, because it gives you a lot of opportunities to kind of whiff or or make some mistakes or figure out how much you don't understand. If one of my brothers or something was saying, I don't know anything about this and I want to get into it, I'd say, like, figure out what neighborhood in Richmond you really like and you think is growing, and what are the market dynamics there, what are tenants like there, and look for a single family or a duplex. There's, a lot of people say that kind of stuff, but I do think that starting small, not because you need to be small, but just like giving you some reps at it. Because, if you already own a business and you can own your own building, that's often it's probably, again, you can.
It's a good way to get into it.
Edit this out if it sounds really stupid, but that's a good way to learn about real estate. Is like, I own a business and I bought a building and now I'm the landlord too, and I'm realizing like some of the components of like, well, what's going on here? Wow, I really overpaid for that, and that's okay, but I won't do that next time. So I don't think being in a rush is the right way to get into real estate. I think that's probably not the right way to get into anything, but I think that I look from the outside like I move really fast, but people just don't see all the build up to that. Once I have that knowledge or decision or know what I want to do, I can go quickly because I've already thought about it. So I already know, like, I know this is what I want to do with this property. I can move really quick on this, or so
that's a great point. I see, like, the world tells you invest in real estate now, stop waiting, like do this now. You're missing out. The longer you wait, this is how much returns you're not getting, and how much you're not adding to your bank account or your wealth or anything like that. And there's a handful of business owners that I know that don't invest in real estate, and they're just like, how do I get started? And I can tell that they feel that pressure because now they're making capital from their company. Their company is now successful. And so they have this profit that's coming in, and they feel, I don't know if guilties, or maybe it's like FOMO, like fear of missing out, where they're like, I need to understand this real estate thing. And a lot of times it's like, well, if just the advice of like, if you could buy your own building to operate out of, you're going to learn a ton. You're going to learn a ton about just operating a property and what to do and what not to do. And then use the capital to go get a single family house, and just like, because chances are if that goes horribly wrong, ideally, if you have a successful business, stuff like that, it's not going to absolutely wreck your finances or anything, but it's going to be tuition. It's going to be tuition at worst, probably.
I think the other thing with somebody in that position, there are plenty of people with expertise and not capital that you can partner with. There are plenty of guys who are a broker who know a ton. They don't have maybe the cash themselves to buy a deal, but if you go and you say, hey, I'm trying to do this, I'd love to partner up with somebody. I think they're, like I said, anybody can make a performance say anything, but that's the other great way to learn. Like, I've learned way more when I've partnered up with people who bring something different to the table than I do, So in this market, that opportunity is there. I don't know about every market, but in this market, if you go to some of the local brokers and say, hey, I'd like to do something, and I'd like you to be a part of it if I can find something, just because I'd like the expertise. There's tons of people who are willing to do that.
Yeah, that's a great point. And I think often overlooked, where like people hear about partnerships, but think about partnering directly with a broker, or I've also seen brokers be matchmakers in a sense, where they're like, I actually know this guy who has all kinds of money but no time. You don't have any money, but you want to do this thing. You got plenty of time. Or this person has a ton of experience, but he's looking for a little bit of capital and stuff like that. And I've seen brokers like put strangers together, and obviously, meet, get to know, have the right documents in place. But I've seen that happen as well. So they're actually matchmakers with real estate and with investors to some capacity, because they want to make deals work. They want to bring people together and make that, those successful partnerships.
That's just feeding the plant. I mean, that's like, for a broker, that stuff comes back around.
For sure.
You're going to see that guy over and over and over.
The next 3 to 5 years, we have no idea what that looks like, but as it stands right now, where do you think your focus is going to be?
I mean, I wish I could give some like really cool answer. I think it's just a little bit more of the same. There's some things I'm exploring right now that I've done in California, but less here, just in terms of like product types and stuff that I think the market's shifting towards. So I think it'll be more real estate. I think with the current interest rate environment, it'll probably be more ground up type of stuff than it will be rehabs, but that could change tomorrow. I try not to predict that stuff, because who knows? It's better to just try to be like ready to react, I think. The same thing with the businesses. I will, I'm not actively looking to add to that right now, but I wasn't really actively looking for either of these
Right.
things, and they were really great opportunities, and I've been really thankful to be a part of those. So I think it'll kind of be more of the same. I still have some property out in California that I have. Some of it's long-term stuff, some that'll unwind over time. So kind of each year my focus has gotten more and more here as the operating business, we unwound that. And then as some of those properties have unwound, I've been able to kind of focus here more. So I don't know exactly what it'll look like. I think it'll continue to be kind of like Central Virginia focused. That would be the thing I'd bet on the most, is where my mindset is.
Awesome. If people wanted to get in touch with you, would they go to your website?
Yeah, twocreeksco.com. I'm not a social media guy, so I'm not on any social media.
Smart.
But that's got my contact info and stuff.
Awesome. All right, so twocreeksco.com. That's TWO creeksco.com.
Yeah.
Can you name your companies one more time?
Sure. Yeah, Two Creeks is the development company that I operate. Yeager & Ernst is a custom cabinet builder in Barbersville. It works with residential contractors and homeowners and architects. And then Virginia Millwork is a commercial construction or cabinetry company here in Richmond that works mostly in Central Virginia, although a little bit can go a little bit broader down to Hampton Roads and up a little bit, but does commercial cabinetry.
Awesome. Any final thoughts?
Oh, not really. I mean, really appreciate you having me on and been chatting. It's been super fun getting to know you, and super fun to listen to your podcast. Honestly, you get great guests, which I'm not surprised at. I mean, that's what makes a good podcast is great guests. I hope I'm not watering that down too much.
No.
But, I've really enjoyed listening to some of those guys. The ones I like best are the ones where I already know the guy. I'm like, oh, great! I'm gonna actually get a little insight.
Right.
So.
Yeah, and I think people will feel that way about you as well. And I think we kind of joked before we came on where you were like, "Hey, I don't normally do this thing, like pretty private." But so are a handful, not all of my guests, but like a handful of them said the same thing. They're like, "I don't really like to do this," but in my opinion, that's where I try to convince some people to come on. When I'm like, I have a lot of people in my network that are doing some incredible things, but they're busy working and being with their family and stuff like that. They have no intention of being on podcast or any social media or anything like that, which I have a ton of respect for. Like it took me 2 years. I had equipment for this podcast for 2 years before I started because I was like, it's not really the type of person that I am.
Yeah.
But to some degree, I was convinced over and over again that there are such good people in Richmond that don't get in front of cameras. And I think I was in a position to maybe get some of those people in front of them and just learn. And I really enjoy having these conversations. And I'll tell you that from my side of things, I'm really happy that you said yes. Actually, I was thinking you probably wouldn't, but I was really happy that you said yes, because I have a tremendous amount of respect for what you've done and looking at you build a portfolio kind of strategically and move through some really cool buildings in Richmond and really cool neighborhoods in Richmond. I think it's beneficial for this region to have people like you that are willing to put in that work and that effort, and then learning about the companies that you run, the blue collar labor, really just making things with your hands and tools and crafting and keeping that local and providing a great environment for those guys to work in is just incredible. So I really appreciate you. I appreciate what you're doing, and thank you for coming on the podcast.
Yeah, thanks for having me.